Good evening to all participants. I would like to welcome you to this Red Lobster investment update. Joining us today is President and CEO Kuntirapong Chansiri. Joining him is our Group CFO Ludovic Garnier. And also our Group Treasurer Kun Yong-Yuk. This 55-minute session will consist of a presentation and a Q&A session, with at least 30 minutes dedicated to answering your questions. If you would like to ask a question, please submit your written questions via the chat box in Zoom to the Thai Union Investor Relations account. I would kindly ask you to submit your questions in English to avoid any translation delays. Please note that all participants are muted to avoid any unnecessary background noise. I would now like to hand the floor to Kuntirapong.
Thank you very much, Adam, and thank you everyone for joining us today. As announced earlier, we confirm our intention to pursue an exit of our minority investment in Red Lobster. This decision follows detailed analysis conducted by our board and management team. The decision also takes into account Thai Union long-term strategic plan and the interests of our shareholders. Since the minority investment began in 2016, and despite significant operational improvement, the overall financial contribution of Red Lobster to Thai Union has been negative. This impact has been particularly significant in the last 3 years due to the COVID-19 pandemic and inflationary pressures, which have dramatically changed the US casual dining industry. The combination of these headwinds has impacted Red Lobster and resulted in prolonged negative financial contribution to Thai Union and our shareholders. After detailed analysis, we have determined that Red Lobster ongoing financial requirements no longer align with our capital allocation priorities, and we are therefore pursuing an exit of our minority investment. While we will continue to explore available options for effecting this exit, we will record a one-time of 18.5 billion baht or $530 million non-cash estimated impairment charge. This figure will be included in our fourth quarter last year earnings and reflect a write-down of our whole investment in Red Lobster. For Thai Union, this decision will allow us to focus exclusively on our core categories of ambient seafood, frozen and chilled, pet care, and value-added, which have continued to deliver improvement in profitability and gross profit margin. In light of this, we are confident that pursuing an exit of our minority investment position in Red Lobster is the right path for our shareholders. Ludo will now share more, including walk you through the financial details in our presentation.
Thank you, Kuntirapong. So we wanted to start this presentation with the history of Thai Union and Red Lobster partnership. The customer-supplier relationship between Thai Union and Red Lobster started 30 years ago. In 2016, Thai Union took a 49% minority investment within Red Lobster, alongside prior owner Golden Gate Capital. The purpose of this investment was to increase supply, to improve the operation, and enhance Red Lobster's international growth. In 2020, in the middle of the COVID-19 global outbreak, Golden Gate Capital decided to exit its position in Red Lobster, and Seafood Alliance and Red Lobster Management acquired their stake. While this reorganization did not impact Thai Union percentage of ownership, which remained at 49%, it resulted in Thai Union becoming the largest shareholder. 2020 and 2022 presented significant challenges from the pandemic and its variants, which we will elaborate more in the following slides. Throughout its investment and even through the pandemic, Thai Union has consistently supported Red Lobster. Most recently, we provided a $65 million guarantee for the outstanding credit facility in 2022. Last year, a $2.8 million loan was provided to cure the EBITDA covenant breach as of August 2023. In summary, this is a 30 years relationship, which began from a normal customer-supplier relationship and then moved to a 49% minority investment and constant support during unprecedented and prolonged market challenges. So you can see on this slide, on the left, a reminder of the shareholding structure of Red Lobster since 2020. Thai Union is the shareholder number one with 49% of the shares through a combination of preferred and common shares, while Seafood Alliance is the second largest shareholder with 36%, and last, Red Lobster Management owns 15% of the shares. On the right, you can see the evolution of the investment value in Thai Union books since 2016. The blue line at the top represents the total value of the investment. The orange line below represents the value of the preferred shares, while the black line represents mostly the value of the common shares. Looking at the blue line, the initial investment in Red Lobster was close to $580 million. You can see the value was almost stable until 2021, and then decreased to $547 million in 2022, and now around $530 million expected for Q4 23, as per the guidance provided at the end of Q3 23. And this is a result of two opposite effects impacting the common and the preferred shares. On one side, the value of the common shares has been constantly reducing over the years, from an initial $229 million to $74 million forecast for Q4 23. The reason for this decline is the share of loss from operation and from lease accounting that we do record every year. Opposite to this, the value of the preferred shares has been growing from $351 million to $446 million, thanks to the accrued preferred interest. Since 2019 and the adoption of the new TFRS standard on financial instruments, the value of these preferred shares is the result of a fair value discounted cash flow calculation. In 2022 and 2023, preferred interests were not recorded due to the increase of the interest rate in the US. So for you to keep in mind, the expected value of Thai Union investment in Red Lobster as of Q4 23 is forecast at $530 million. Now let's move to the Red Lobster contribution in Thai Union P&L since acquisition. You can see the first 3 years, Red Lobster was accretive for Thai Union's net income and earnings per share. The situation changed in 2020 with the first wave of COVID-19, when Red Lobster contribution turned negative for the first time. Then it went back to profit in 2021 and negative since then. You are used to this format of table as it is in line with our quarterly analyst presentation. The first line represents the share of loss from operation. It corresponds to 25% Red Lobster net income. You can see the magnitude of the loss was under control from 2016 to 2019, with a share of loss between 100 to 200 million baht. The situation dramatically changed in 2020 with the first wave of COVID-19, when Red Lobster had to close most of its restaurants, causing a 1.2 billion baht loss. It recovered temporarily in 2021, then fell back to another 1.2 billion baht loss in 2022 with the Omicron variant and strong inflationary pressures. Over the first 9 months of 2023, the loss from operations amounts to 368 million baht, and our guidance for the full year is a loss of 700 million baht for the share of loss from operation. The second line corresponds to the share of loss from lease adjustment. It's a pure accounting impact due to a timing recognition accounting difference between US and Thai GAAP. There is no cash impact related to this amount. We told you this amount will decrease year on year from 2021 to 2030, and then after it will reverse. The third line mostly corresponds to our preferred interest, with an amount close to 1 billion baht from 2017 to 2021. Over the past 2 years, in 2022 and in 2023, we have not recorded any preferred interest due to the continuous increase of the interest rates in the US. Then after, you see our related finance costs, which have been decreasing thanks to our various refinancing. The last line is the income tax. Red Lobster has been generating some significant tax credit for Thai Union that we can offset with the tax expenses coming from our other activities in the US. Two key reasons for this significant tax credit at Red Lobster. First, we do have, since acquisition, the tax goodwill, which is being amortized and which is generating every year some significant tax credit. Second, as a reminder, Red Lobster is a partnership, and as such, almost has no tax in their reported numbers. So the tax impact from the share of loss from operation and from lease accounting is being calculated and reported at Thai Union level. And now we get back to Kuntirapong.
Since third quarter last year, we told you that we initiated a review of Red Lobster to identify areas for operational and financial improvement, and to identify the path forward for Thai Union with this investment. As a result of this work, the board came to two possible and distinctly different options. Option one was seizing additional funding at Red Lobster and pursuing an investment exit, while option two was continuing to support the business with additional capital. The management team and the board were aligned in the determination that option one was the best path forward for Thai Union. The key rationale for this decision was the following. First, it is our fiduciary responsibility the board and management have to serve the best interests of our shareholders. Second was our commitment to financial discipline. We committed to our stakeholders since 2020 that we will not invest significant additional cash into Red Lobster. And third is consideration of our 2030 long-term strategic plan, which we have been working on throughout last year. This plan is about to finalize, and you will hear more about it in our last slide and also in our next fourth quarter earnings release. One of the key outputs we can already share is that Thai Union will focus on our core business going forward without continued distraction from Red Lobster. Risk management is also another important factor as we analyze the risk and opportunity for each scenario, the likely financial impact to our shareholders. Finally, as we have detailed, the market outlook was a significant factor in our decision, with significant macroeconomic headwinds persisting in the US and specifically impact the US casual dining industry. Now back to Ludo for the financial details.
So based on the past year's financial performance, the tension we mentioned around Red Lobster governance and its cash situation, and the macroeconomic context in the US, we assume Red Lobster's potential market value to be low in the short term, and we do not currently expect to recover the value of our investment. To be conservative, we are intending to impair our whole investment in Red Lobster, both the common and the preferred shares, with an estimated impact of 18.5 billion baht. The exact amount as of Q4 will depend on Q4 Red Lobster actual contribution and related FX between Thai baht and USD. You can see on the left a simulation of the impact of this impairment based on our 9 months actual numbers, as the full year numbers are currently being closed. The intention is to record this impairment in our Q4 numbers, and it will be classified in other income between the OP and the EBIT as it is presented here. Thai Union consolidated net income over the first 9 months amounts to 3.2 billion baht. Should we add the estimated 18.5 billion baht Red Lobster impairment, then the pro forma net income would be a loss of 15.3 billion baht. Importantly, The actual calculation as of Q4 will of course include the profit made by Thai Union over Q4. As a matter of presentation, we are also discussing with our auditors about the potential reclassification of Red Lobster contribution in IFRS 5, assets held for sale, in our Q4 23 financial statements. This will not change the net income impact, but this could allow us to reclassify all the impact related to Red Lobster in one specific line, loss from assets held for sale, isolated at the bottom of our P&L in Q4 23. You may remember, we used the specific accounting standards, IFRS 5, when we sold our fishing fleet in Ghana back in 2016. We do expect the conclusion of our discussion with auditors in the next weeks, but again, if accepted, it will be only a matter of presentation. The net income impact presented here will not be changed. So on this slide, you can see a simplified balance sheet. Again, we started from the balance sheet as of Q3 23, as Q4 23 is currently being closed. The impairment will impact on our financial assets, with Red Lobster investment value being impaired to 0. And our equity will also decrease from the P&L impact. Few things which I think are very important to notice. First, the impairment, the transaction we are talking about, is a one-time, with no cash impact. This impairment will be made on our financial assets, not the operating assets, so that it will not have any impact to our normal business operation. That means it will not impact our ability to generate income and cash, and our ability to perform all our financial obligations. Second, you can see our balance sheet, even after this impairment, remains extremely strong. Our debt level remains unchanged, and our net debt to equity, which amounts to 0.65 as of Q3 23, will amount to 0.84 pro forma after this impairment. This is still quite a low level comparing to the other entities, or to our own internal target of 1 to 1.1, and to our financial covenant, which is a maximum at 2. Third, by impairing the whole investment in Red Lobster in Q4 23, this will allow us to stop recording any contribution from Red Lobster starting in Q1 24. Given the fact that the contribution has been negative to our P&L over the past few years, we do expect an accretive impact in our P&L from this investment exit. So there are some other things we wanted to outline for you today. First, regarding Thai Union covenant. You know, the most common financial covenant for Thai Union bonds and loans is net debt to equity, which cannot exceed 2. You could see on the previous slide that we were at 0.84 after the impairment. The pro forma will still be far below 1, so we are extremely comfortable with this ratio. Then we also have for 2 old bonds an interest coverage ratio financial covenant. You can see the amount of these T2 related bonds with respectively 3.5 billion baht and $75 million. As per contractual definition, the impairment will impact the EBITDA. Due to practice here in Thailand, while we are talking about a non-cash transaction, it does impact the covenant. So for this covenant, we will call for a bondholders meeting and ask for a waiver to exclude this transaction from the ICR calculation. The second impact is related to our dividend. For 5 old bonds, we have a negative covenant where our dividend distribution cannot exceed 60%. For these ones also, we will ask bondholders for a waiver to exclude the Red Lobster impairment from the calculation of potential dividend to be distributed. The amount of these 5 old bonds is 13.5 billion baht and $75 million, which also includes the 2 mentioned ICR covenant bonds. For these 2 topics, the waiver will require 25% quorum and 50% of the votes of the quorum. We are confident we can get the waiver for these 2 covenants from our bondholders. Yet, we are also considering a worst-case scenario where we will not get the approval for one of these bonds. Then, in that case, the Union has sufficient credit lines available to repay them if needed. The second point on the right is related to the credit rating. As already said, our view is that Union financial statements remain strong after this one-time non-cash impairment. This transaction will not have any material adverse impact on the business, operation, assets, or financial conditions and credit profile of Thai Union Group. We have been presenting this transaction to TRIS, and we do expect some updates from them in the coming weeks. The last point on the right is related to our 30 years customer-supplier relationship with Red Lobster. We do expect this relationship to continue even after the execution of the exit. And now I will hand over to Yongyut for the next slide.
Thank you, Ludo. This is just to provide more detailed information on existing TU debentures. There are 11 bond tranches outstanding. 2 will be mature in January and in February this year before the bondholder meeting date, so that it will not be relevant in this case. TU already reserved the fund in bank account for repaying these 2 bonds. 2 bond tranches totaling 3.5 billion and 75 million US dollar outstanding issued by year 2016 still have interest coverage ratio as financial covenants, while as all other bond and loan after 2016, TU already took those covenants out. The covenant is to maintain ICR at above 3 times. In normal situation, TU report more than 5 times on this ratio. However, with expected net loss, this ratio will turn to negative. 5 bond tranches totaling 13.5 billion and US dollar 75 million outstanding, including the 2 ICR bond issued by year 2019, still have dividend cap restriction as negative covenants, whereas all other bond after 2019, TU already took those covenants out as well. So the covenant is to pay dividend not higher than 60% of the annual report consolidated net profit. TU already paid interim dividend for the first half of 2023. With expected net income loss, TU will not be able to pay dividend without waiver from bondholder on relevant tranches. Any bond issued after 2016 and 2019 should not have these 2 covenants, and bond investor to those bonds should already accept this condition. And except for perpetual bond, TU only sell the bond to institutional or high net worth investor. So now I want to move to Khun Thiraphong on the strategy 2030.
And lastly, we wanted to give you a glance regarding our strategy 2030 process, which is currently under finalization. This is the first time we share about it, and you will hear more in our Q4 earnings release. This plan provides the direction, the key priority areas, and the way forward for Thai Union. From the top, strategy 2030 redefine the why, that is the vision and purpose for Thai Union. It is to become the world-leading marine health and nutrition company. This means maintaining our position as industry leader while driving superior shareholder returns, building a diversified marine-focused portfolio, and staying committed to shaping the future of nutrition for human and pet. In the middle, we have identified 3 key pillars that guide us on what our focus area for 2030 are. The first pillar and our key focus is to defend our core and continue the growth area that generate cash, such as in ambient, to grow the category and explore strategic M&A in other European markets, as well as driving commercial excellence and revitalizing our brand strategy in the US. Our next focus area is next wave of growth, which outline the area which will grow to deliver sustained profitability through 2030 and beyond, such as in pet, to accelerate business and explore strategic M&A. The third pillar, which is more long-term, it outlines the new frontiers for growth in the long term, such as in pet services, to explore and expand into pet medicine, pet tech, pet-focused platform. And lastly, we have identified and begun work on some critical must-do. This address how we can achieve the 2030 strategy direction. In short, we will focus on strengthening our enabler and building our capabilities. Most importantly, it will address where to improve efficiency at Thai Union. In conclusion, Thai Union will focus on becoming the leading marine health and nutrition company by focusing on core businesses and select new area of our future growth. Importantly, it's our clear determination that Red Lobster does not fit in either of these categories. And this is the end of our presentation. Today, we wanted to share with you this decision that after 8 years of being a minority shareholder in Red Lobster, our intention is now to pursue an exit from this investment. We must acknowledge that over the past few years, we have not been able to outweigh the significant industry headwinds, the prolonged higher interest rate environment, and the rising material and labor costs. The casual dining environment in the US has also dramatically changed compared to 2016 when we did the investment. As explained, we determined that the current fair value of our investment in Red Lobster is likely to be low, and it would be prudent to write off the whole value of it. This impairment is a one-off, non-cash transaction and come at a time of extraordinary balance sheet strength for Thai Union, where our net debt to equity ratio is 0.84. And to prove Thai Union's strong financial position, the board has approved a share repurchase for financial management purposes, not exceeding 3.6 billion baht or 200 million shares. We have concluded that this is the right path for Thai Union. We will face in fourth quarter 2023 with a temporarily negative impact, but we do remain confident that this investment exit will lead to accretive results starting in 2024. And again, Thai Union business and financial position remain strong with a low leverage ratio. You heard a bit today regarding our strategy 2030, which is currently being finalized. Through this, Thai Union management will advance on growing strategy that strengthens its overall profitability and deliver long-term enhanced value for the group shareholders. We believe that the key takeaway of this updated strategy is to focus our core business, and with this investment exit, a significant step toward executing this strategy. More to come on Strategy 2030 in our fourth quarter earnings release. And I would like to thank you all once again for joining us today. Thank you very much.
Thank you both Kuntirapong and Ludo for that update. We will now transition to the Q&A, where we have received a number of questions already, but I'd like to remind you all to please submit any questions you have into the chat box to Thai Union Investor Relations account. Okay, so if we move to the first question that we have received, it asks, why is this the best path for Thai Union and its shareholders?
As I mentioned earlier, the combination of sustained industry headwinds, higher interest rate, and rising material and labor costs have impacted Red Lobster. After much consideration, we have also determined that Red Lobster ongoing financial requirements no longer align with our capital allocation priorities, and therefore pursuing an exit from our investment. Since the minority investment in 2016, and despite significant operational improvement, contribution of Red Lobster to Thai Union has been negative, and this impact has been particularly significant in the last 3 years due to the COVID-19 pandemic and inflationary pressure. This decision will allow us to focus on our core categories. which will continue our improvement in profitability and gross profit margin.
Thank you, Kuntirapong. The next question asks, how long do you anticipate it will take to complete your investment exit?
I think for the reasons we have outlined, we believe that pursuing an exit of our minority investment position in Red Lobster is the right path for our stakeholders and our shareholders. So we don't want to speculate on any timing. We will continue to work very closely with Red Lobster and the advisors to ensure our ultimate exit is done in a manner which is best serves all stakeholders.
Thanks, Ludo. Moving on now to the next question. The participant
Negative impact
Okay.
I apologise for the technical difficulties there. I will ask the question again. The question was, why are you writing off the entirety of this investment? And are there no potential acquirers of your stake?
Well, given the continued negative impact on Thai Union results and the macroeconomic environment in the US casual dining industry, we believe that the current fair value of our investment is likely to be low. And with our conservative approach, it would be prudent to write off the value of our investment in Red Lobster. This write-off once again will be recorded as a one-time of 18.5 billion baht or $530 million US. It is non-cash impairment charge in our fourth quarter earnings. We will continue to explore all options for exit of this investment. Regardless, Thai Union financial structure remains very healthy, with the company continuing to deliver improvement in our performance.
Thank you, Kuntirapong. The next question asks, would this waiver for the year 2023 only, or waiving through the life of the bonds?
Yes, it will be only for year 2023. And what we are going to add the waiver is to exclude this one-off non-cash item from the net income and EBITDA calculation so that we can comply back to normal governance and normal situation.
Thank you, Kun Yong-yuk. The next question asks, what will happen to Red Lobster in Thailand?
So you know that Red Lobster has 2 restaurants right now in Thailand. I hope you went there. We don't expect Red Lobster operation to be affected by our decision to exit the investment. You know that we're not doing anything with the restaurant of Red Lobster in Thailand. They have been operating by Thai Bev. We are just sourcing for them.
Thanks, Ludo. Now on to dividends, where somebody asks, will Thai Union pay a dividend based on our 2023 performance?
So here we mentioned that we do have a covenant capping the dividend payment to 60% of the net income. The net income will be negative in 2023 due to this one-time non-cash impairment expense. So we are currently discussing with our lenders and bondholders to potentially exclude this one-time impact and be able to distribute some dividends based on 2023 performance. We will have a conclusion for this request before our earnings release in February.
Thank you. The next person asks, what is the trigger event for Thai Union to make this decision?
Since last year, we have been revisiting our strategy 2030, which center around Thai Union core business. And part of the review, Red Lobster was identified as a non-core. Red Lobster performance for the past 3 years has also not yielded positive contribution to Thai Union. And as previously disclosed in our third quarter, Thai Union and Red Lobster initiated a review of Red Lobster to identify area for operational and financial improvement. While we believe that Red Lobster will prosper over the long term, we determined that Red Lobster ongoing financial requirement no longer align with our capital allocation priorities. As such, it's our belief that maintaining our investment in Red Lobster no longer serve the best interest for our shareholders.
Thank you, Kuntirapong. We have just under 20 minutes left. Could please continue to insert any questions you have into the chat box. For now, we move on to the next question, which asks, can you please provide a more detailed outlook for how this exit will impact earnings going forward? And also, are you planning on providing any updates to your guidance ranges?
So we mentioned the minority investment in Red Lobster does not represent a positive contribution to Thai Union earnings. So the fact that we fully write off our investment in the fourth quarter of 2023 will allow us to stop recording any contribution from Red Lobster starting in Q1 24. As such, we do expect an accretive impact from 2024 from this investment exit.
Thanks, Ludo. On to the next question, which asks, other than Red Lobster, are there any other investments which do not fit within Thai Union strategy?
So you go ahead.
Well, I think this is probably the last piece of the underperformed business in our portfolio. That's the reason why we have decided to exit so that we can put it behind us in 2023, so that we can start fresh in 2024 with our strategy 2030. And again, we're gonna focus on our core going forward.
Thank you, Kuntirapong. The next person asks, will ending the investment partnership impact Thai Union's supplier relationship with Red Lobster?
Well, with over 30 years relationship between Red Lobster and Thai Union, we don't expect any change of our relationship with Red Lobster from the exit.
Thank you, Kuntirapong. We'll just wait a few minutes to see if there are any further questions. Okay, the next question asks, has Thai Union provided any guarantee to Red Lobster?
I think you heard about that in our earnings release. So Thai Union did provide a guarantee to Red Lobster back in 2022. There were 3 criteria for this guarantee to be released. The first one was a certain amount of EBITDA to be delivered in 2023, and then a CEO and a CFO permanent to be appointed also at Red Lobster. So we believe these 3 conditions were met in 2023. So we do expect this guarantee to be released in 2023, at the end of 2023. We have not obtained yet the formal letter from the lender to confirm that we are currently in discussion with them, but we believe we're not exposed on that. Apart from this one, there is no other guarantee provided by Thai Union to Red Lobster.
And from this exit, there will be no additional financial support from Thai Union to Red Lobster.
Thank you both. With just under 15 minutes, please insert any further questions you have into the text box. Okay, we've got one question specifically for Kun Yonyut, which talks about your level of confidence in achieving the waiver.
Yes, we are confident to get the waiver. Actually, we already planned for the bondholder meeting. The meeting will be held on the Feb of 15. And now we look into the detail of bond investor. We also already discussed this topic with Tris. And also we have one-on-one plan with key investor to obtain the vote from them. So we have quite detailed work plan already in place. And also we have available credit line just in case in the worst case situation as mentioned by Ludo.
Thank you, Kun Yonyut. The next participant asks, who would be the potential buyer of Thai Union shares in Red Lobster?
So we are currently exploring all the options for the exit. But when we think about who could be the potential buyers for Red Lobster, you could think about some PE fund who could be interested. You have many PE funds focusing on the restaurants in the US. You can have also some corporate entities, some restaurant companies, of course, being interested. You have some very large restaurant company in the US and also overseas, which are interested about investing in the US. So we believe there could be a reasonable amount of potential buyer for Red Lobster. Of course, it's a significant size of operation. Okay, so anyone cannot buy these operations because this is 700 restaurants. So we need some people who are able to manage this size of operation.
Thank you. And the next question now takes us back to the waiver. And the person asks, do you plan to provide any compensation for the waiver in order to ensure its success?
We still discussing with our advisor to go through the whole process, and we will make decision on this later on.
And again, as you know, we only have institution bondholders, and of which these bond that we have, this covenant, it's only 11 bondholders that we have to deal with. And they are our supporter, long-term supporter for many, many years. So we are very confident that we will get support from these bondholders.
Thank you, Kuntirapong. Moving on, the next question asks, by this decision, is there any fee or cost associated with the exit?
So we do believe that by impairing the whole investment, we already take a conservative view. We don't expect any significant fee or cost to come on top of this impairment.
Thank you. And the next asks, do you expect any rating downgrade or outlook from the Tris rating?
So as we mentioned, we do believe that this one-off impairment is a non-cash transaction. It doesn't change anything fundamentally to our balance sheet. You have seen the pro forma balance sheet before and after the impairment. After the impairment, the net debt to equity remained extremely strong. Okay, so right now the management views is to say there is no reason for downgrade. So we are kind of positive on the Tris rating, but of course we are currently discussing with them, and we do expect their feedback to come in the next days and weeks.
Thank you, Ludo. And this is your last chance to submit any questions. For now, I'll move on to the last one that we've received, which asks, after you put impair assets into other expenses, how about the loss from Red Lobster operation in the last quarter of 2023? Coupled with that, does the loss from operations of Red Lobster still need to be consolidated in the P&L or not?
So starting with the first question, there will be a share of loss in Q4 23. We provided a guidance by 700 million baht in our Q3 earnings release. We do expect the share of loss to be slightly higher compared to our guidance. But yes, there will be a share of loss recording in Q4. But anything we do record as a share of loss in Q4, we decrease the impairment. So it will be a wash between the two lines. And the second question, does the loss from the operation of Red Lobster need to be consolidated? As long as we do impair the whole investment at the end of Q4, there is no need, no requirement for us to continue recording any contribution from Red Lobster starting in Q1 2024. So in 2024, thanks to the impairment we do record in Q4 23, we don't expect any contribution to come from Red Lobster.
Thank you, Ludo. And I'll just pause for one last time for any other questions. Okay, a similar question to what we had before. The question asks, what impact does the investment exit have on Thai Union's other US operations?
Well, only our frozen business has relationship with Red Lobster. And I do not expect any impact for our business due to the exit, as we have a long-lasting relationship with the company.
Thank you, Kuntirapong. One last question just come through. The person asked, does the write-off of 18.5 billion baht, is that the maximum loss, or could it potentially be lower or higher until the deal is done?
So here we do believe we took a conservative approach. The idea for us is to impair the whole investment that we have in Red Lobster. So this is the 18.5, where does it come from? We don't think it could be exceeding this one. It could be slightly lower, maybe in Q4, depending on the actual Red Lobster loss in Q4 we mentioned, and depending on the FX rate. But this is the most realistic approach right now. So really 18.5 is really what we do expect to have at the end of the year. Now, regarding the second question regarding any impact when the deal is done, it will take a bit of time, I think, to have the deal being performed. And right now, given the performance of Red Lobster, we do believe this is a realistic approach. Keep in mind that right now, there are some lenders right now at Red Lobster. If we sell the business, they would be the first one to be repaid. Okay, and we don't expect that on top of this amount. Right now, the value of Red Lobster is much higher. Okay, so for the time being, we are very realistic. And we say our best assumption for the time being, and that the one we will take in our Q4 numbers, is an impairment of 18.5 billion baht, which is a conservative approach.
Thank you, Ludo. Last call for any other questions. Okay, then with that, I would like to thank Kuntirapong and Ludo for both the presentation and the answers in the Q&A session, as well as Kun Yongyut. That concludes this investment update on Red Lobster. As a kind reminder, please note that our corporate silent period starts on the 18th of January and runs until the 19th of February. If you have any further questions regarding this update, please reach out to the investor relations team. Thank you once again.
Thank you very much.
Thank you, everyone.
Sawadee krap.
Thank you so much for your attention.